Hey guys, today I'm going to explain about insurance. So let's start with an introduction. Introduction of insurance. Insurance is an arrangement with the company in which you pay them regular amount of money and they agree to pay the cost. If for example you dies or get ill or if you lose or if you get damaged with something. Okay, it is an act, system, or business of providing financial protection for property, life, health, etc. against specified contingencies such as death, loss, or damage, and involving payment of regular premiums in return for a policy guaranteeing such protection. So, this was the introduction of insurance. Now, its definition: insurance is a contract represented by a policy in which an individual or entity receives financial protection or reimbursement against losses from an insurance company. Insurance policy are used to hedge against the risk of financial losses, both big and small. Insurance is a contract between the insurer and insured. Now let's talk about the history of insurance. The history of insurance traces the development of the modern business of insurance against risks, especially regarding cargo, property, death, automobile accidents, and medical treatments. Initially, people used to sell goods in their own villages and gathering societies. But furthermore, in earlier 14th centuries, the European traders used to travel to sell their goods across the globe and hedge the risk of the theft and fraud by the captain or crew. This is also known as resicum genethium. Due to these reasons, trader was not able to cover the wider market. Therefore, the trend of hiring commission-based agent get emerged to the market. The traders export their goods to the agents and agents used to sell them in their behalf on their behalf. But yet some risks were there such as sea storms, pirate attacks, poor handling systems, etc. Insurance is the oldest method of transferring risk, which was developed to mitigate trade and business risks. Okay, now let's talk about the history of insurance in India. In India, the history dates back to the year 1818 when Oriental Life Insurance Company came into existence at Kolkata to provide protection to English widows. In the year 1823, the Bombay Life Assurance Company came into being. Then there was Bombay Mutual Life Insurance Society, which started its business in year 1870. The main feature of this company was that for the first time the premium rates for the lives of Indians and non-Indians were same. The legislative history of insurance law in India starts from 1912 when India Life Assurance Companies Act was enacted. This was enacted to regulate insurance business in India. In the year 1928, the Insurance Companies Act was enacted. In 1938, after 10 years, the Insurance Act came into existence, which consolidates and amended the existing amendments. In the post independence India, the Life Insurance Corporation Act 1956 was enacted, by which about some 245 Indian and foreign insurance companies were nationalized. Now let's talk about contract of insurance. It generally defines insurance in a shorter manner or in a easier manner. So it need not to be emphasized that insurance is also a contract where an offer is made in the shape of proposal, and when it is accepted subject to the principle of insurance, an insurance contract came into existence. So this is so simple to understand. Let's take an example. In such contracts, one party, for example, the insured, agrees to pay a specified sum which is called as premium, and the other party, the insurer, agrees to indemnify the insured in the losses or damages on happening of an event. So this is a contract of insurance in between insurer and insured. It means that there should be an offer and its acceptance. The party should be competent and sound mind, and there should be legality. So this was contract of insurance, and thank you.